discuss with classification of financial institutions, correct? So we started off with banking institutions. We have completed commercial banks as well as cooperative banks. Moving on to the next part of the classification, non-banking financial institutions. What is it? In short, it's called as NBFCs. These are institutions which are registered under the Companies Act of 1956, which are engaged in giving out loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local authority, or marketable securities like nature of leasing, hire purchase and insurance. Now these non-banking financial institutions, now we saw what was banking, right? Banking institution, the major objective is to what? Accept, deposit and lend loans. Now here if you can see in the second line, NBFCs deal with what? Engaged in the business of loans and advances. So NBFCs mostly do not accept deposits from the public. Is that clear? Make the statement straight and clear that banking institutions accept deposits and lend loans, whereas non-banking financial institutions, that is NBFCs, do not accept deposits. They only lend loans and advances, acquisition of shares, stocks, etc. Okay, so this is the basic objective or the function of NBFCs. The further classification of NBFCs are A. Developmental banks. Now these banks are only meant for developing a particular sector or an industry or an area. Okay, it is a financial institution concerned with providing all types of financial assistance. It can be a medium-term loan as well as a long-term loan to business units in the form of loans, underwriting, investment, guarantee operations and promotional activities that is meant for economic development in general. Now, under this category of developmental banks, whatever banks are listed, here we're going to discuss 3 of them. All these are meant to economically develop these industries or institution, which in turn will help the economic development or the growth of the economy will be improved. Is that clear? So that's the purpose of developmental bank. As the name itself is developmental, so it's going to develop or improve the productivity. Under that we have the first one, IDBI, which stands for Industrial Development Bank of India. It was constituted under the Industrial Development Bank of India Act 1964. And its sole purpose is for what? Developing. What is it developing? Industries, right? Now industries which are situated mostly for the purpose of production and manufacturing goods for home consumption, that is for the consumption of our own country, or you are meant to export these goods for other countries. Okay, industries either for home consumption or for the purpose of export of goods are meant under the coverage of IDBI. They can approach the IDBI bank and then take loans and advances or any kind of financial assistance from the Industrial Development Bank of India. Is that clear? Next up is SIDBI, stands for Small Industrial Development Bank of India. Now this was aiming at industries at large scale industries. Here it is aiming specifically at small scale industries. It is a development financial institution in India, headquartered at Lucknow and having its offices all over the country. What is the purpose of SIDBI? It helps in promotion, development and finance of MSME sector in India. What does MSME mean? Medium, micro, small, medium enterprises. I repeat, micro, small, medium enterprises sectors in India. SIDBI loan provides financial assistance to MSMEs through their various loan schemes. Okay, now this is specifically aimed at small industries, okay, where their capital is not much or neither do they have enough amount of investment into buying high technological factory equipments or machineries or assets. So therefore, SIDBI is an institution which provides them financial assistance, especially when I'm talking about micro, right? Micro is smaller, even lesser than small industries, right? Just a very small capital producing small amount of goods or services, etc. So even to such small micro industries or enterprises, SIDBI provides financial assistance. Moving on, NABARD. NABARD stands for National Bank for Agriculture and Rural Development. National Bank for Agriculture and Rural Development. It is an apex development finance institution which is completely owned by the Government of India. The bank has been entrusted with matters concerning policy, planning, operations in the field of credit for agriculture and other economic activities in rural areas in India. Now, NABARD is an institution which is completely taken over or has a responsibility over the agricultural aspects, okay, in terms of how do I plan the loan scheme, or how do I plan the EMI, how do I fix the interest rate, right, in what schemes for different kind of crop, what is the different kind of schemes that we can provide, what is the time period that they can repay, right? All these decisions or all these choices are made by the institution called as NABARD. Is that clear? So matters concerning policy making, the planning, operations in the field of credit. So what kind of credit can be given? What will be the eligibility of the farmer in order for him to approach NABARD and take a loan? What is the eligibility? What are the documents he needs to provide? When can he repay? How can he repay? What is the interest rate? Now all these decisions or choices are made by NABARD. It is only constituted to agriculture. It does not make choices about any other kind of industries. Let's say any other textile industry, etc. Those are not agricultural. Those comes under IDBI or SIDBI. Agriculture only aims at farming or agricultural manufacture of products. Is that clear? Moving on to the second classification of NBFCs, non-banking financial institutions. First is equipment leasing. If you remember, we had discussed about the financing services. Okay, financial services, the first component of Indian financial system. There we discussed about these asset-based and fee-based services. If you remember, there we came across leasing, hire purchase, etc. So one such is equipment leasing. What is it? It is an agreement where the lessor, who is the owner of the equipment, allows the lessee to use the equipment for a specified period in exchange for periodic payments. The subject of the lessee lease may be vehicles, factory machines, or any other equipment. Now we all know what is lease, because the person or the institution cannot afford to purchase the heavy equipment or a machine or an asset. I would like to lease out the machine. Okay, I would like to take the machine on lease rather than purchase it. Got it? So my lease amount will be lesser compared to my purchase price of the machine. That is why I am going to go for the option of leasing. So under leasing, what can I do? I can only utilize the asset for my production purpose or for my manufacturing purpose. I am not the owner of the asset. Is that clear? I'm only going to use the machine and pay for the usage, the money to the lessor or to the owner of the equipment. Is that clear? Why do we need leasing? When we do not have enough funds to purchase the heavy equipment or the asset, we go for the option called leasing, where even though we don't own the asset, we are going to take it on lease, use the asset for couple of years, maybe 5 to 10 years, and pay the periodic amount to the owner of the asset, use the asset, get the benefit out of the asset, and then return back the asset to its owner. Is that clear? That's the concept of equipment leasing here. Next up is hire purchase. Now here it is another way how you can own an asset. Leasing is where you can only use the asset or take the benefit out of the asset, whereas hire purchase is not so. Hire purchase, you can own the asset once you complete all the payments of installment. Hire purchase is an agreement for buying expensive consumer goods where the buyer makes an initial down payment and pays the balance plus interest in installments. So here if you go and recall back to financial services fee based and fund asset based services, there we come across the hire purchase system where you're going to purchase the asset or buy the asset on installment basis, okay, which will consist of principal amount as well as the interest charge. Now let's the asset price is rupees 10,000 and the owner or the supplier of that asset is charging 10% interest, that is 1,000 rupees. So total the price of the asset is 11,000 now. Why? Because you're taking it on hire purchase system. Now this 11,000 you do not have to pay one shot, okay, or one down payment. You can just pay a small amount of down payment, okay, let's say 1,000 rupees, and in the remaining 10,000 rupees it will be divided over the next 5 years, okay, or next 3 years or next 5 years equally into smaller amount of money, okay. So at the time of the down payment the asset will be transferred to you as a purchaser or as a company. You will be making periodic payments as well as using the asset or taking the benefit from the asset. Once that 5 years time period is completed and you have not backed out from paying any kind of installment, all the installment you have timely paid, on the last installment when it is completed, you get the ownership rights on the asset. Is that clear? Anytime in between if you have backed out any kind of installment, then the owner can take back the equipment or the asset. Is that clear? But if you have timely paid it, promptly paid it, then you get the ownership rights and the usage rights of the asset or equipment. So there are companies which provide for leasing options and also for hire purchase. Moving on to the third one, National Housing Bank. Now here it is a bank, that is National Housing Bank is a Government of India owned entity which was set up on 9th July 1988. What is the purpose? To promote the housing sector in India. Again, this topic we also came across the financial services where NHB was set up for the acquisition of a house or construction of a house or modification of a house. All the three activities come under the power and control of National Housing Scheme. I repeat, acquisition, construction or modification of the house. Is that clear? So this is the aim of National Housing Scheme, to promote housing finance institutions both at local and regional levels. So NHB is going to provide you loans or financial assistance as well as advice as to how to go about building a house or acquiring a house, what is the legal formalities to be completed, how is the ownership rights to be transferred, etc. All these are led and controlled by the National Housing Bank. Next, we'll be moving to the last category of financial institutions called as regulatory institution. Here I am just going to talk about the meaning of these institutions. Next chapters we're going to study in detail. Starting with RBI. We all know that Reserve Bank of India is the central bank of India. It is the head of all the other commercial banks in India. And it also manages the country's main payment systems and works to promote its economic development. So any action or any monetary payment or receiving that the government of India has to do, it will do through RBI. Okay. Now let's say if government of India has to, if there is floods in Africa, correct? And Indian government wants to help that country. Okay. And if it's going to sanction rupees 10 lakh, who's going to pay it? RBI. So RBI is going to carry out all the monetary transactions on behalf of government of India. Is that clear? So it's going to control the monetary supply and make all the decisions of interest rate, all the other instructions to be given to the commercial banks, etc. is done by the Reserve Bank of India. Second, SEBI. SEBI, as we know, is called as Securities and Exchange Board of India. It is a statutory regulatory body established by the Government of India to regulate. What is the purpose of SEBI? To regulate securities market in India and protect the interest of investors in securities. This is very important. It is set up by to regulate the securities market and also very prominent protect the interest of investors, because so often we have seen so many fake companies coming up and promising the public and promising the society, you invest so much amount into our company or into our mutual fund, we will promise to give you back 5 times of that amount of money, correct? And people will normally get attracted or directed their attention towards these kind of schemes which are very look promising but they are not, and then they end up stealing that money, or that company is got to know that it is a fraudulent company, or the owner has taken away that money and fled from the company or fled from the entire country itself. Haven't we heard such newses, correct? So to avoid all that, okay, to make sure the investor is what? Educated. What is a genuine company? What is a fake company? Okay, where do we check whether is it registered or not? All these conditions or help is given by SEBI. Is that clear? The primary objective of SEBI is to protect the interest of people in the stock market and provide a healthy environment for them. So it's to not make sure even those companies who are getting registered in the Bangalore Stock Exchange or National Stock Exchange are genuine companies. Those companies are not meant to harm the environment or harm through the products or services the society. Is that clear? Both securities market also is going to regulate and also protect the interest of the customers or investors. Have you, if you can recall this case, Harshad Mehta is a famous securities market fraud case. Okay, there's also a movie that has released in his name. Okay, Harshad Mehta case. If you can look at that movie, you will better understand how people or in the past what has happened in India. That's the reality. You will get to understand how the fraudulent activities had happened and how they had to fool the entire society or all those people who invested just because they were being promised a higher rate of return. Just look at it if you get any time. The last one is IRDA, the Insurance Regulatory and Development Authority of India. The full form is the Insurance Regulatory and Development Authority of India. What is it? It is an autonomous statutory body tasked with regulating and promoting the insurance. Now, what is the objective? It includes promoting competition to enhance customer satisfaction. Now, there is insurance companies which is completely government owned, and there are insurance companies which are privately owned. Is that clear? Now, this also is set up to make sure enhancing customer satisfaction. Which of these entities gives better satisfaction for customers? Okay. Now, insurance company, the main objective is to what? Overcome or face loss in a planned manner. Correct. Now, tomorrow goods might be destroyed because of fire, because of theft, etc. Correct. Now, in order to overcome that future loss event, right from today, I'm going to take a policy. I'm going to take a goods policy or a fire insurance policy, then start paying my EMIs accordingly. So, if and when that event occurs, I do not have to worry how to, how to cover up that loss. Where do I get that money from for all that loss? Because I've already taken up the policy, the worry about the risk or the worry about the loss is not there. So, that is what insurance companies are set up for, to promote competition to enhance customer satisfaction with increased consumer choice and lower premiums while ensuring the financial security of the insurance market. The other day also I gave you this example for people who are 20 less than 30 years. The insurance, if the people take up right now, the premium they have to pay will be very less because they have a long way to go. They are just in their early 20s or 30s probably, and they have a long way to go. Okay, and when the same thing insurance policy is taken up by a 60-year-old man or a 60-year-old woman, the EMIs will be very high, because the life expectancy then is going to be very short. They are very close to death. That's what companies understand. So they're very close to death, so automatically the EMIs are going to be high. So depending upon the age, depending upon the lifestyle, my premium amount or the EMIs that I'm going to pay will also be differing accordingly. Is that clear? So we have completed with the classification of financial institutions. We have covered all the classification. Under banking, we have covered commercial banks, public, private, regional rural banks, foreign banks. Under banking institution, the second part is cooperative banks. We moved on to NBFCs, where there are two classifications, developmental and others. Under developmental, we studied IDBI, SIDBI and NABARD. Under others, we studied equipment leasing, hire purchase, housing finance company. Under regulatory, we studied Sebi, RBI and the insurance regulatory body. Is that clear? So with this, we have completed unit number 1.